Well, welcome to today's seminar on retail banking opportunities, the next decade. My name is Brian Kaplan. I'm editor of The Banker magazine, joined with a panel of experts here to discuss the issues.
I'm Anthony Thompson. I'm the co-founder and chairman of Metro Bank, which is the first new high street bank in the UK for almost 150 years.
I'm Mark Gunning. I'm responsible for global banking solutions at Temenos, and we're the leading provider of core banking solutions internationally.
I'm Toby Manner, head of segment household and group marketing at Nordea. We are a leading bank in the Nordics with 10 million consumer customers in the 4 Nordic countries, Baltics and Poland.
I'm Patrick Muir. I'm Chief Marketing Officer of City UK Consumer, covering both the City and the egg businesses in the UK.
It seems to me it is a very exciting time in retail banking, in a way for a number of reasons. One, of course, is that the financial crisis has really opened up the marketplace, because I think more than at any other time there's opportunities for new players to come into the market. If the idea of non-banks such as supermarkets or telecom companies getting into banking, if it's ever going to happen, it's definitely going to happen now. And I think that's an interesting one. Of course, the established banks will not be letting that just carry on without remark. They'll certainly be putting together strategies to respond to that. I think secondly, of course, it's a time when the multi-channel concept is really taking off, and we're seeing people, a new generation of consumers who've grown up with technology, and it's their kind of first call that they would bank by different channels. I mean, by internet, but by devices, different mobile devices as well as the old established branching. And I suppose telephone banking is pretty old-fashioned by now as well. And so obviously there's clearly a challenge there for banks to be able to serve customers through their desired channel. And I think finally then there's a sort of issue around seeing the customer as somebody unique and providing unique solutions for them. So much of the sort of traditional work on customers and marketing has always been about sort of finding segments and just delivering for that segment a kind of sort of broad solution. It seems to me now we're almost in an era where we can almost take customers individually and come up with kind of individual solutions for them. So, I'd like you to help me by kind of coming up with your comments on either of those first remarks, or perhaps having your own ideas. So, Anthony.
Well, I'll start by challenging you.
Please do.
Because I don't think that customers actually do want to be perceived as unique.
All right.
What customers realise that when they go to Sainsbury's to buy their groceries, they're not unique in their purchase of kumquats. When they go to John Lewis, a UK retailer, to buy their television, they're not unique in wanting a 36-inch television. What they want from the retailers that provide them, and I think banks fall into that sector, is somebody who understands their needs and meets their needs, be it through service, be it through convenience, be it through the range of products that are wanted. I think the seismic shift that we're seeing is from the bank directing the customer to the customer now directing the bank or its financial institution. Customers are becoming more empowered, they're becoming more aware. They're going to choose in the future the channel that they want to use and the way in which they want to interact with their bank. And if their bank doesn't provide it, I think they're going to go somewhere else.
Yeah. Toby, what's your experiences in the Nordics?
Well, I would agree with you that customers are becoming more empowered going forward, and that should be the guiding star for the banking industry in terms of value proposition development. But I would have to disagree with you in terms of the future of banking being only about convenience and the sort of commodity type of banking. Our experience in this one is very different. We see the market polarizing. Definitely there is the mass market part of it, but then again, especially in the upper segments where customer needs are more complex, more sophisticated, we see room for a relationship approach in the market, which essentially means that we put in place a segmentation strategy, a holistic value proposition for each segment, and the core of the value proposition for the upper segments is the personal advisory, which comes to your point about customers being unique and then addressing their unique needs out of that angle. And especially in the Nordic markets, where there are markets like Denmark, where the prevailing market standard is that customers have one bank, one primary bank, clearly. This approach is clearly working for our favor on those markets.
Okay, Patrick, well, can you throw some light on this? I mean, Citi is obviously a bank with a huge customer base all over the world. So it'd be very, very difficult for a bank like Citi to really drill down to the individual customer. But is that the challenge?
I think it's important as a consumer is to separate the word unique from individual. Is actually what we all want as the world becomes bigger and homogenized, and Citi has got a vast global footprint, and it's very easy in a world which, as it develops, in a way the choices contract at a rate of knots, is consumers don't like to feel kind of isolated and just not recognized, particularly if they're going to go to the trouble of having a relationship or putting their faith or trust in an institution, any institution in any industry, is actually people want to be recognised as they, just at a very basic level, the fact that they exist at all.
Yeah.
I wouldn't want to be pedantic about this, about the use of the word unique, but the reality is even very, very rich people don't have their cars built for them. What they do is personalise an existing Mercedes or a BMW or whatever. So I think that the reality is in very, very few circumstances in financial services, perhaps I would agree that at the very, very top end, there will be an undue level of personalisation. But for the mass market, and a phrase we haven't heard for a while, the kind of mass affluent, I think it is about, as Patrick said, it's about personalisation, it's about understanding, it's about me being a human being.
All right. Mark, what's your definition of what's unique and what's not unique?
Well, I mean, I want to agree with all of you, because we've got a lot of banks who are clients doing different things, and that probably is quite interesting in itself, that banks have different approaches to the market. What I would say is that the kind of software we provide, we build what we think is very clever software, and a few years ago we were building stuff to do the most complex products that we thought clients were asking us for to uniquely position a banking product or market segment. And they don't really ask for that now. They ask for simpler products, but much simpler products, much simpler banking products, but they definitely ask for personalisation. What they ask for is the ability in the relationship with the client to say, well, this is our product and it's a simple product, but we can change it a little bit to suit you. We can change the terms, we can change the rate, whatever it happens to be. And they ask for that. They ask for the ability for the systems to help them do that. They definitely ask for segmentation as well. They ask us to give them the information back about the client's business, and they ask to segment that customer so they can appropriately allocate them to the right service, the right channel, the right individuals, things like that. So we certainly see a trend towards more personalised service with simpler banking products.
Yeah. Well, Anthony, you said you didn't agree with my definition of unique, but presumably you did agree with my idea that the financial crisis has opened up banking to lots of new players, because you're a new player. So, I mean, perhaps you could give us an idea for, why you see the opportunity for Metro Bank.
Well, at risk of
currently.
never being inviting back and disagreeing with you again, I'm not sure whether it was solely the economic environment. I think that was clearly a driver. But bear in mind, we started on the launch of Metro Bank, or the concept that became Metro Bank, some 3 years ago, when the world looked very, very different. The UK market in particular was some would regard it as an oligopoly. There were a small number of mature players who really regarded it as a no-growth market. Yeah. And I think the general view of UK banks was that the only way to make money was to drive out costs. Yeah. And in a service business such as banking, the only way you drive out costs, by and large, is driving out people. We have a very different view of life. Our view of life is that banking can be a growth business, and the model upon which Metro is based, I know a lot of your readers will be familiar with Commerce Bank, started by my partner Vernon Hill, was a belief that if you invest in delivery, if you invest in improving the customer experience, you can produce sustainable long-term growth. And that's really what drove the concept of Metro Bank in the UK.
But to turn it around, but you have to be able to do it in a cost-effective way, otherwise you go out of business, don't you?
Well, it depends on your definition of cost effective. Ultimately, I believe that profit is a byproduct of serving the customer well. I think a lot of institutions, not just banks, but other institutions, have come to believe that profit is their raison d'etre. And I think when that happens, you lose sight of the customer. To paraphrase an old saying, nobody became poor by underestimating their customer. If you put the customer at the centre of everything that you do, and you need a very strong technology platform to underpin that, but if you put the customer at the centre of everything that you do, I believe that you can create value. It doesn't just have to be about taking out costs.
Yeah. Toby, do you agree with that proposition?
Well, to start with, I definitely agree with your view that banking is a growth business, and that goes for Nordea as well. We have an organic growth strategy, and in the core of it, it all boils down to delivering great customer experiences, which is one of our values, and thereby profit indeed is a byproduct of great experience, good service for the customers. But in terms of addressing the opportunities in banking, what would be my hypothesis is that when this regulatory tsunami hits the banks, there will be, of course, as we all know, a lot of capital demands, funding, liquidity issues to address, and there will be a number of weaker banks that do not have a sustainable return on equity for this situation, and they will need to dramatically review their business models, and that will create opportunities for strong banks out there in the market to grow structurally, to grow organically, but also there is a room for paradigm shift in terms of service models, in terms of cost to serve, changing the game in these respects in banking.